Is the Nvidia stock worth buying in 2026? Well, let's take a look. The date is February 27th, 2026. We're going to take a look at the... Here we are on Nvidia's homepage on investing.com. And Nvidia is part of the information technology sector, a semiconductor company. It is at the forefront of artificial intelligence, AI, and really is kind of a big driving force creating the chips that AI runs on, the major chips that AI runs on. And so it's had quite the run. We're going to look at price, analyst targets, fair value, price to earnings ratio, PEG ratio, things like that, and the charts and such. So let's get started. Well, it is currently sitting at $184.89 US per share. In the most recent day of trading, that is the 26th of February 2026, it saw a dip of 5.46%. Its 52-week range is $86 to $212. So its highest has been $212 and lowest $86 in the past 52 weeks. We're going to look at fair value a little bit later, but here's a quick look at it. It's uncertainty around Nvidia and its future and such is of the moderate level. So it's not low, but it's also not high. It's not considered a speculative stock in my books. It's right in the moderate level there. If you follow my investing portfolio structure on eToro and investment suggestions, I don't know what your goals are exactly and such, but that I only recommend having a couple at the most speculative stocks, and that is your high uncertainty stocks. Bearish to bullish signals. We've got 3 bullish and 1 bearish signal here. Starting from the top, analysts anticipate sales growth in the current year, so they're anticipating the sales to continue to grow. 31 analysts, that's a significant number of analysts. Okay? So 31 analysts have reviewed their earnings upwards from for the upcoming period. So they've looked at where Nvidia is and reviewed their earnings target basically upwards, or what they're expecting. Nvidia is trading at a low price to earnings ratio relative, this is the key part, relative to near-term earnings growth. And we're going to talk about that a little bit later. And then the one bullish signal is trading at a high earnings multiple, which is different. See these two things here, you may think what I just read with the bullish signal, now the bearish signal, counter, again, kind of against each other, or don't make sense. The bullish signal is bringing growth into the picture, expected growth. Let's take a quick look at the charts, and then we'll go to valuations. So for the past week, Nvidia's seen a dip of 2.6%. In the past month, they've had a dip, or pretty much stayed flat, but dip of 1.9%. In the past 3 months, they've seen a gain of 4.4%. In the past year, they've seen a strong gain of 53%. In the past 5 years, they've seen a very strong gain of 1,251%. And in the past 10 years, they've seen a whopping 23,982%. That is massive. That's the biggest return I've seen in my, when it comes to stocks. I'm not talking currencies and cryptos and commodities and things like that. I'm talking stocks, okay? Biggest return for stocks that I've seen in my reviews and stuff. Again, not thinking cryptos, commodities, I'm talking stocks here, okay? So before you get Bitcoin, Ethereum, all that, look, this. I'm looking at stocks. Valuation. It is currently sitting at a 37.4 price to earnings ratio. Okay, price to earning compared to its peers, which sit at a 59.5, and the sector, which sits at a 12.2. So Nvidia's peers, it's currently lower than its peers, but higher than the overall sector. Okay, so peers are more closely related to Nvidia, making in the similar vein of like semiconductors and such, whereas the whole information technology sector is a broader spectrum. The PEG ratio, price to earnings to growth, basically when we bring in and calculate growth into it as well, or expected growth, it is sitting at a 0.56. What does this tell us? It tells us the valuation is actually showing it is undervalued based on expected growth in the future. Right? That's that bullish signal, the third one that we read. It's it's showing that based on what the earnings could be in the future and expected earnings are in the future, its current valuation is showing undervalued, meaning it's got expected upside based on those earnings and growth potential. We know this because if it's sitting at a 1, right, if the PEG ratio is right at 1, then it's flat. If it's over 1, then it's showing overvalued. Under 1, undervalued. If it goes into the negatives, then it is showing basically that there's a negative growth return, and that's not good. Okay, so analyst targets, right? The analyst target is a potential 40% upside from here. Fair value is a 17.7 potential upside for here. So, who is this stock for? What portfolio is this for? Well, I'll share my thoughts. Obviously, Nvidia's had a huge run over the past 5-10 years, right? However, its valuation shows that based on the numbers and expected earnings for the future, it shows that it could